Every Saturday morning, just after the 9 o'clock news, we do a financial program, Retirement Matters. Dale Smothers is the host from R.D. Smothers Wealth Management. Morning to you, sir.
Good morning, Larry. How are you, sir?
Doing well, doing well.
It's a crazy time in the market right now. October has struck again.
It has.
Yes,
it
sir.
has. So what's the deal, Lucille?
Yeah, so theoretically, what the stock market is not at all reacting to the government shutdown. That's not what's kind of driving this uncertainty right now. Really, the uncertainty is coming from China. But let's first unpack kind of how we got here. We've gotten here by continued highs being hit all throughout 2025, really due to artificial intelligence spending. Artificial intelligence companies are spending trillions of dollars, and whether or not that's going to be profitable, well, that's something that is also maybe a fear if we can maybe think of fears in the future. Right now, it's all optimism. AI, artificial intelligence, is going to change the world, Larry. It's going to change the world. And the companies that are investing in that tend to go higher with their stock prices. At least that's what we've seen for the last couple of years. On top of that, we've got Fed rate cuts that are coming up. Now, the uncertainty of the government shutdown is not giving the Fed the data they need to really make a bold decision on the rate cuts, but we still expect a rate cut this month, and we expect one in December. We also have the idea that November and December are traditionally really good for the market. So all of this is really what we're considering tailwinds to continue propelling us higher in the stock market. But the room for error, that margin that we may have for the wrong stock pick is getting slimmer because of all the uncertainty. And a lot of that does revolve around China. The trade war is not settled. As a matter of fact, if anything, it might be ramping up a little bit more with China. All of this revolves around rare earths. You may have heard about that in the news. And a lot of that is so much in the weeds that it's not necessary to get into. But the reality is China's trade deal has to be settled, or we will see some uncertainty creep into the stock market. The stock market is priced to perfection. On top of that, a lot of these AI companies are overvalued because we don't really know if this trillions of dollars of spend is actually going to be profit in the future.
No one has a crystal ball.
No one has that crystal ball. A good example for listeners is to maybe think about how you used to Google. 2 years ago, you would Google everything. Now, a lot of people just AI everything. And so companies like Google are losing revenue, and no company like OpenAI, which is what typically would run ChatGPT, how do you profitize that? How do you make profit from ChatGPT? That's the big question. So is this going to be a profitable venture? It's going to change the world, no doubt. But how do we find profit as a company in that? And then from there, is the stock itself overvalued? Another big tailwind is concentration risk, a headwind rather, something that may slow us down just a little bit, is a concentration risk. That's a fancy word for saying the S&P 500, which is the measure of the overall stock market, is really, if we think through this, it's made up primarily of 10 major companies. The top 10 companies are around 90% of what we're seeing happen in the stock market right now. All the ups that we've seen have been really pulled up by the top 10 companies, and guess what they are? Artificial intelligence companies. These tech companies are very, very concentrated in the S&P 500. The S&P 10 has done phenomenally well this year. The S&P 490 been kind of flat. So if you've seen a portfolio that's maybe not gone up as high, it's because maybe you're diversified across the entire S&P 500 and not as concentrated in the top 10. That's not a bad thing depending on where you are in your journey. So here is the overall message that I would say. If we're going into the end of the year, I think it's very important for us to take advantage of this optimism that we see in the stock market. Figure out where you are in your journey. Larry, if you're less than 5 years away from retirement, now is the time to begin looking at the type of portfolio you have, the amount of money you need going into retirement, and do you have enough right now? Is it possible for you to take some risk off the table and still achieve your objectives? If you're over 10 years away from retirement, I would embrace this optimism in artificial intelligence. I can't tell you right now how they're going to make it profitable, but I can tell you it's likely going to be a profitable venture, and I would continue to invest in artificial intelligence, especially if we see significant pullbacks in the coming months, which I do foresee some pullbacks in these valuations. These companies have been bid up very, 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 very high. And when they begin to be sold off because people realize, well, maybe that's not going to be as profitable as we thought, that's the time to buy. Do not panic sell, buy more if you're more than 10 years away. If you're less than 10 years away, you really need to be taking a look at where you're at now. If you're less than 5 years away, it's imperative that you do. This is what we talk about every single weekend on our show.
And that's what you'll be talking about this Saturday morning.
Exactly what we'll be talking about this Saturday morning. And we would love to help you across the street here from the Big Dawg in Campbellsville. We got an office in Bowling Green. be happy to help if we can in any way, put a little bit of a light, if you will, on your portfolio and know whether or not you need to make the next step in one direction or the other.
Very good. Big mystery it is.
Yes,
for
sir.
Sure. There he is, folks. Dale Smothers. He hosts Retirement Matters every Saturday morning right here on the Big Dog. Dale, thank you again for coming in.
Thank you, Larry. Appreciate you.